Let's talk about another mover, Brad. And this is a surprising one, to me at least, I have to admit. We're talking about Norwegian Cruise Lines. Like, isn't this supposed to be the golden age of travel? Everybody's getting back out there. Well, Norwegian numbers did not look so great this morning. The company's wider than expected loss, it reported $1.04 versus the 87-cent loss that analysts were anticipating. Revenue did beat estimates, but the company's operating expenses went higher last year due to the resumption of voyages, what that's going to cost. The company also talking about bringing on a couple of new ships. Capacity is going to be going up this year. And it's working on getting those expenses in better control, Brad, and in getting the margins back in expansion mode as well.
Yeah, anytime you're adding extra vessels, of course, to the fleet, that is going to be a major expense there. And it's not like they all get delivered at the same time, too. So it'll be interesting to see what type of impact that has on the financials. But then going forward as well, this has been a massive type of regeneration of demand. And with that, for Norwegian, for Carnival, for any of the other cruise lines as well, Royal Caribbean or Caribbean, however you're pronouncing it at home, this is a major re-engagement period for these companies where they have not been able to benefit, to your point, from some of the, what Hilton has called the golden age of travel, in an interview that we had with the president of Hilton. And one of the things that continues to kind of boggle the mind here is where some of those dollars may be flowing into, if not into, some of the cruise line experiences. And so as the experience economy is really foreseeing and continuing to undergo this counter-cyclical recovery, we've heard that from Expedia's Peter Kern. We've heard that from Glenn Fogel at Booking Holdings. We've heard that from Delta CEO Ed Bastian. And so if the travel and accommodations parts of the industry elsewhere are getting some of those dollars, what of those dollars is still left in this near term for the cruise line operators, and how much will they have to continue to spend to really woo the consumer right now as well?
Well, the problem for Norwegian doesn't seem to be getting people on the ships. It seems to be making money off the people on the ships, or making more money off the people on the ships. The company did say that it's expecting to average about 100% occupancy for its first quarter, and it's on track to reach historic levels for the second quarter. Unclear if it'll be still at 100%, but you can't stuff more people on the boat than 100%. So the issue here, it seems to be, is cost. The company's doing this operating efficiency effort, and that'll result, it says, in a decrease about 15% in its adjusted net cruise cost, excluding fuel, for the full year. So, you know, we'll see when that starts to bear fruit and if the numbers start to look better at that point.
Yeah, and I'm just doing a quick search here, too, because it's one figure that I meant to look up before the show. But even as we're talking about 100% occupancy, the question, even for the airlines as well right now in this experience economy, too, is on what routes, what schedule, perhaps, as well. If we're applying that to cruise lines, for the comparisons to pre-pandemic, some of them might not still be operating the same full schedule that they had done pre-pandemic right now. So with that in mind, that's of course going to overflow into the amount of customers that are looking to or have to go when there is a certain kind of voyage being able to set sail as well. So just the scheduling. Yeah, exactly. I'm not a huge cruise fan, but anyway, I know some of the terminology there.